Welcome back to Singapore Property Talk Law. I'm Damien, and as always, we're diving into the latest property trends here in the Lion City. This time, it's all about December 2024. And let me tell you, there's some seriously interesting stuff in this data. To help us unpack it all, we've got our resident property expert.
Hi everyone, Serene here. Ready to break down all the juicy details of the December property market. We're covering it all: HDB resale, condo resale, and of course the rental scene, both condos and HDBs.
Sounds like we've got a lot to cover. So let's jump right in with the HDB resale market. The overall picture: a slight price increase, just 0.1% in December compared to November.
Yeah, but that small increase, it's actually hiding a bigger story.
Oh, what's going on?
Non-mature estates, they saw a much more impressive price jump, 0.7%.
Ah, so while the overall market is kind of steady, those non-mature estates are heating up. Interesting. But the mature estates, they kind of stayed flat, right?
Yep, pretty much took a breather this month.
Makes sense. Okay, so that's the month-to-month view. But what about the year-on-year picture?
Hold on tight, because year-on-year, HDB resale prices are up a whopping 9.8% from December 2023. It's a pretty clear upward trend.
Wow, 9.8%. That's a big jump. So is this happening across all types of flats, or are certain ones, leading the charge?
Across the board, every single HDB room type saw those year-on-year price increases.
Wow, really? Every single one?
Yeah. Three-room flats, they're leading the pack with a 10.7% increase. Then you've got four-room flats at 10% and five-room flats at 8.7%.
So even the bigger flats are seeing big increases.
Exactly. And even the executive flats, which are usually a bit more stable, they saw a respectable 5.5% increase.
Okay, so prices are definitely up. But what about the actual number of people buying and selling? Are people still out there making deals happen?
Absolutely. We saw 2,129 HDB resale transactions in December.
Wow, over 2,000.
Yep. That's a 9.1% increase from November and a 5.9% jump year on year.
So even with prices going up, people are still buying.
The market is still hot.
It certainly seems like it. Okay, so lots of transactions happening. But what types of flats are people going for? Is there a particular size that's super popular right now?
Seems like four-room flats are the crowd favorite, a solid 46% of those transactions.
Yeah, four rooms are a good size for families, I guess.
Yeah.
What are the others?
Five-room flats are coming in at 22.4%. Three-room flats at 25.4%. And then for those who need a bit more space, executive flats made up 6.2% of the transactions.
Interesting. It's really those mid-range sizes that are doing well. Now, another question. Are buyers sticking to the familiar mature estates, or are they venturing out to the non-mature areas? What are you seeing?
Seems like more and more buyers are embracing those non-mature estates.
Really? Why do you think that is?
Well, they accounted for 58.6% of the volume, so it's a pretty clear trend.
Wow, that's a big chunk.
Maybe it's the allure of newer developments, or maybe it's those friendlier price tags.
Yeah, who doesn't love a good deal? Speaking of deals, well, maybe not quite a deal, but I got to ask, what was the highest price someone paid for an HDB resale flat in December?
Okay, get ready for this one. A five-room flat in Bishan Street 24, it went for $5,539,000.
Whoa, 1.5 million for an HDB flat.
Yep,
That's something else. Guest location really is everything.
it plays a big role for sure.
Definitely. So that brings us to those million-dollar HDB flats that everyone's talking about. How many of those did we see in December?
We saw 95 flats cross that million-dollar mark in December.
95. That's a lot, and it's up from 87 in November, right?
That's right. The trend's not slowing down.
So where are all these million-dollar flats popping up? Is it the usual suspects, or are we seeing them in new areas?
Toa Payoh is leading the pack with $20 million transactions, then Bukit Merah with 15 and Queenstown with 10.
Okay, so the usual suspects are still up there, but what about those new areas you mentioned?
Right. We're also seeing them pop up in Kaling Lampoa, the central area, Bishan, Geylang.
Geylang, wow, that's interesting.
Oh, and even Woodlands.
Woodlands, million-dollar HDBs in Woodlands. That really is a game changer.
It seems like this trend is definitely spreading beyond those traditional hotspots.
All right, so we've covered HDBs. Now let's switch gears and talk about condos. They always come with a heftier price tag, but are they seeing that same kind of price growth?
In November 2024, condo resale prices saw a pretty decent increase, 1.2%.
Okay, 1.2%. So bit more than the HDBs overall, but not those huge jumps we saw in certain segments.
Exactly. And this growth, it was pretty evenly spread across the different regions, too.
Regions, you mean like CCR, RCR, all that?
Yeah, exactly.
Okay, before we go any further, could you do a quick recap of what those mean for anyone who's not, a property expert?
Sure. So imagine Singapore as a target. The core central region, or CCR, that's the bullseye. It's that prime downtown area with all the glitz and glamour. Think Orchard Road, Marina Bay, Sentosa Cove, luxury condos, high-end shopping, sky-high prices.
Got it. So CTR is like the VIP section.
Exactly. Then you've got the rest of Central Region, the RCR. It surrounds the CCR. It's a bit more laid back, but still super central and convenient. Think Bukit Timah, Queenstown, Tiong Bahru.
Okay, so RCR is like the cool, up-and-coming neighborhood.
You got it. And lastly, the outside Central Region, the OCR. That's basically everything else, the suburbs. Think Jurong, Tampines, Woodlands, where you'll find more of those HDB estates and newer condo developments.
Okay, so OCR is where you get more space for your buck.
Pretty much.
Great. So back to prices. You said 1.2% increase in November for condos. How does that compare to last year?
Year on year, condo resale prices are up a solid 4.2% compared to November 2023. So despite, everything going on in the world, the condo market is holding its own.
That's good news for condo owners.
Yeah.
But you mentioned the price growth was spread across the different regions. Any standout performers in that mix?
Actually, the RCR led the pack in terms of that year-on-year price growth.
Oh, interesting. The RCR again. Seems like it's a popular spot.
It really is. The CCR saw a 1.6% increase, the OCR 3.6%, but the RCR took the crown with a 4.3% jump.
Okay, so RCR is doing well for both HDBs and condos. Now, are people actually buying these condos or are they just browsing? What about transaction volume?
Oh, there's definitely buying happening. We saw 1,023 condo resale transactions in November.
Over 1,000, so a decent amount of activity.
Yeah, although it was actually a dip from October, about 5.8%.
A dip. Is that a sign of things slowing down?
I wouldn't say that. It's still a 19.8% jump compared to last year.
Okay, so a little dip month to month, but the overall trend is still up.
Exactly.
What about the breakdown by region for those condo transactions? Any surprises there?
When it comes to volume, the OCR actually takes the lead 50.9% of those transactions. The RCR is next at 31.6%, and then the CCR makes up 17.5%.
Okay, so for condos, it's the OCR that's really popular. Makes sense, I guess, since it's generally more affordable.
I think so. Buyers are definitely finding that balance of price and lifestyle.
Right. Speaking of price, what was the highest condo resale transaction in November? Anything crazy?
Get ready for this. A unit at Leon Residence sold for $13 million in November.
$13 million. Talk about a luxury pad.
Yeah, no kidding.
All right, before we move on to rentals, I'm curious about something we hear a lot but don't always explain. Subsale transactions. What exactly does that mean?
So imagine you buy a brand new condo directly from the developer. That's what we call a primary sale. But then let's say a few years down the line, you decide to sell that condo. That's a subsale transaction, basically a resale of a condo that's not brand new.
Okay, so it's like buying a pre-owned condo.
Exactly.
Got it. Okay, now let's talk about everyone's favorite topic, rent. Is the rental market as hot as the resale market, or things cooling down a bit?
Well, the rental market definitely has its own things going on. Condo rental prices went up by 0.9% in December 2024.
So rents are going up too. Not quite as much as resale prices, but still.
Yeah, it's a noticeable upward trend for sure.
Are we seeing this across the board for condos, like CCR, RCR, OCR? Are they all seeing those increases?
The CCR and RCR both saw a 1.1% increase in rents, while the OCR had a smaller increase, 0.3%.
So closer to the city center means higher rent. Makes sense. But what about the year-on-year picture for condo rentals? How do
Right.
December 2024 rents compare to December 2023?
Year on year, it's actually just a tiny increase overall, only 0.1%. But there are some differences depending on the region.
Okay, so it's not as straightforward as just saying rents are up everywhere. What are those regional differences you mentioned?
Well, the CCR and OCR actually saw rental prices dip a bit, 0.8% and 0.7% decrease, respectively. But the RCR had a 0.7% increase.
So the RCR is bucking the trend again, with both sale and rental prices going up. But are those condos actually being rented out, or are they just sitting empty?
Oh, landlords are finding tenants for sure. Condo rentals surged in December, with 5,862 units rented out.
Wow, that's a lot of people choosing to rent.
Yeah, and that's a 17% increase from November and 3.4% higher than last year.
So a lot of people are opting to rent instead of buy, I guess.
It seems that way.
Makes sense with property prices and interest rates being what they are. What about that regional breakdown for rentals? Is the OCR still the most popular?
Yeah, for rental volume, the OCR is still on top with 38.2%. Then comes the RCR at 32.5% and the CCR at 29.2%.
So it looks like people are prioritizing affordability and convenience when it comes to rentals.
I think that's a fair assessment.
All right, let's shift over to the HDB rental market. What's happening on that front?
We're seeing an uptick in prices there, too. December 2024 saw HDB rents increase by 0.4%, with both mature and non-mature estates seeing the same increase.
So it's not just condos then. HDB rents are going up too. Are we seeing bigger increases for certain sizes of flats?
Year on year, all HDB room types saw rental price increases. Three-room flats are up 3.5%, four-room flats 4.6%, five-room flats 2.5%, and executive flats 2.7%.
Okay, so landlords are definitely seeing good returns across the board.
Yeah, it seems like demand is strong for all sizes.
And overall, how does the year-on-year picture look for HDB rentals?
Overall, HEB rental prices are up a solid 3.6% from December 2023. So despite some little ups and downs, the long-term trend is definitely upwards.
Okay, 3.6%, that's a significant jump. Now, are we seeing the same kind of surge in HDB rentals as we saw with condos? Are more people renting HDBs?
We did see an increase in HDB rental volume. 2,448 units were rented out in December.
Okay, so more HDBs are being rented out than before. Is that a big jump from November?
It's a 13.6% increase, yeah.
So decent increase, but not as big as the condo surge.
Yeah, and it's actually still lower than last December by 15.4% and 13.6% lower than the 5-year average for December.
So there's still room for growth in the HDB rental market.
Definitely.
What about the types of HDBs being rented out? Were those four-room flats still the most popular choice?
You guessed it. Four-room flats are leading the pack, 38.4% of rentals. Then you've got three-room flats at 34.2%, five-room flats at 22%, and executive flats at 5.4%.
So it really is those mid-range sizes that are most in demand, whether people are buying or renting.
It seems so.
All right, so that was a whirlwind tour of the December 2024 property market. We covered HDB resales, condo rentals, and HDB rentals.
Lots of numbers.
Definitely a lot to digest. But one thing's clear. The Singapore property market is still very much alive and kicking with lots of interesting trends emerging.
For sure.
We'll be back in a bit to delve a little deeper into these trends and see what we can learn from them. Stay tuned. Welcome back to Singapore Property Talk Law. Phew! We just went through a ton of data about the December 2024 property market.
A lot to unpack, that's for sure. Million-dollar HDBs, rising condo prices. The Singapore market is definitely still buzzing.
It is. And one thing that really jumped out at me was how well the RCR is doing, both in terms of price growth and how many transactions are happening. Seems like it's the new hotspot for buyers, A&D renters.
Absolutely. I think the RCR really hits that sweet spot. You know, it's accessible, got all the amenities you need, and it's relatively affordable compared to the CCR. It's a big draw, especially for younger professionals, families, anyone looking for a vibrant lifestyle without, breaking the bank.
Plus, it's got that cool factor, right? You've got those shiny new condos, but also some charming older properties with a lot of character. Something for everyone.
Totally agree. And we're seeing those rejuvenation projects, too, in the RCR, bringing new life to older estates, creating even more attractive living spaces.
Now, speaking of RCR, we've been throwing around these acronyms, CCR, RCR, OCR.
Yeah.
But maybe for those just tuning into the Singapore property scene, could you give us a quick rundown of what those actually mean? Like, geographically, where are they?
Sure thing. Okay, think of Singapore like a target. So the core central region, that's the CCR, that's your bullseye. It's the heart of downtown with
Right
all
there.
the fancy stuff. Orchard Road, Marina Bay, Sentosa Cove, that's where you find your luxury condos, high-end malls, all the high rollers.
So the CCR is where you go to see and be seen.
Exactly. And then surrounding that, you've got the rest of Central Region, the RCR. It's still central, still super convenient, but a bit more laid back. Think Bukit Timah, Queenstown, Tiong Bahru. You'll find a mix of residential and commercial, a bit more chill.
So that's RCR, the cool up-and-coming sibling. Where does OCR fit in?
Okay, so the outside Central Region, that's your OCR. Basically everything else, it's the suburbs. Think Jurong, Campines, Woodlands. That's where you find more HDB estates, newer condo developments, and generally more space for your money.
Got it. So basically, there's a region for every taste and budget.
Exactly. And it's worth remembering these regions, they're not set in stone. Things change, new developments pop up, infrastructure improves. What might be considered OCR today could be the next RCR a few years down the line.
That's a great point. It's all about looking ahead. Okay, let's zoom back in on the HEB market. We talked about non-mature estates doing well in the resale market. Why do you think buyers are increasingly looking at those areas instead of the established mature estates?
Well, affordability is definitely a big factor. Non-mature estates tend to be easier on the wallet. especially for first-time buyers or anyone watching their spending.
Makes sense, especially with interest rates going up. But is it all about price? Or are there other reasons?
Price is a big one, but it's not the whole story. Non-mature estates often have newer flats, so they're in better condition, maybe have more modern amenities.
So you're not just buying a place to live, you're buying a newer lifestyle.
Right. And there's also the development factor. Non-mature estates are seeing a lot of investment in infrastructure, new MRT lines, shopping malls, all those community facilities. Makes them more and more attractive to live in.
So it's a whole package, the flat, the amenities, and the potential for future appreciation.
Exactly. And I think demographics play a role too. More young families, professionals, they're willing to live a bit further out from the city center if it means more space and a more affordable lifestyle.
Yeah, quality of life versus being right in the CBD. Makes sense. Okay, let's switch gears to those million-dollar HDB flats. We saw 95 of those transactions just in December. Seems like it's becoming the new norm.
It really does. And it's definitely got people talking.
So why are people willing to shell out that kind of money for an HDB? What's driving this trend?
Well, I think it's a few things. First, the overall increase in HDB resale prices has pushed some flats into that $1 million range, especially in those super desirable locations.
Location, location, location. It always comes back to that.
It does. But it's not just location. There's also the limited supply of new HDB flats in mature estates. That drives up demand for the resale ones, pushes prices higher.
Classic supply and demand.
Exactly. And then there's also the perception that these $1 million HDBs, they're a good investment.
Like a status symbol.
Yeah, a bit of that for sure, but also a way to preserve wealth and potentially earn rental income.
So it's not just about having a place to live. It's about investing in a piece of the Singapore dream.
You got it. And as long as demand stays strong, we'll probably see this trend continue. Now, before we jump into rentals, there's one more thing we should talk about: financing. Interest rates have been climbing, making it pricier to get a mortgage.
That's a really good point. Financing is a huge part of all this. Higher interest rates can really change what people can afford. What's your advice for buyers in this kind of market?
Be cautious. Do your homework. Really factor in those higher interest rates when you're budgeting. Shop around for the best mortgage deals and make sure you can manage those monthly repayments without stretching yourself too thin.
Sound advice.
Yeah.
It's not just about getting the keys. It's about being financially smart. Okay, let's talk about rentals. We've seen some changes there too.
Yeah, the rental market, it really reflects what tenants are looking for now, what their priorities are, and what we're seeing is a move towards smaller units and more central locations.
So it's all about convenience and lifestyle. But what's driving that? Is it just about affordability, or is there more to it?
Affordability plays a role, but it's not the whole story. We're also seeing more flexible work arrangements, more people working from home, or doing that hybrid thing, so being close to the office isn't as important anymore.
That makes sense. If you're not commuting every day, you can choose a location that really fits your lifestyle. So how does this affect different areas of Singapore? Any big shifts in rental patterns?
In the condo rental market, we saw the RCR do really well. Both prices and volume are up, which, aligns with what we saw in the sales market. The RCR is popular because it's got that balance of accessibility, amenities, and affordability.
So the RCR is the place to be, whether you're buying or renting. What about the HDB rental market? Are we seeing similar trends there?
In the HDB market, we saw strong price growth year on year for all room types, which means demand for HDB rentals is still high.
So both condo and HDB rents are on the up.
Hmm.
What does that mean for landlords and tenants?
For landlords, it's good news. They can expect better rental yields and probably good capital appreciation in the long run. But for tenants, well, they need to be prepared to pay a bit more, especially in those popular locations.
So it's a good time to be a landlord. What's your advice for tenants in this kind of competitive market?
Do your research. Be ready to negotiate and be flexible with your expectations. Don't be afraid to look at different neighborhoods, maybe consider a smaller unit, and be realistic about your budget.
Great advice. Okay, let's step back for a minute and look at the bigger picture. What are the main takeaways from all this data?
I think the biggest takeaway is the Singapore property market, it's still strong, it's still attractive, but it's also more complex now, more nuanced. We're seeing different things happening in different regions, different property types, even within those types.
Right, you can't just jump in without thinking anymore.
Yeah.
You got to do your research, understand the trends, make informed decisions based on your own situation.
Absolutely. And remember, the market goes up and down, it's cyclical, But over the long term, Singapore property has a good track record. It's a solid investment.
Solid advice. Okay, before we wrap up this episode of Singapore Property Talk Law, let's leave our listeners with something to think about. We talked a lot about non-mature estates becoming more popular. Do you think this trend will continue? And if so, what does it mean for buyers and for the market as a whole?
That's a great question. As those non-mature estates become more developed, more desirable, will they eventually lose their price advantage? Will we see the lines between mature and non-mature blur? How does that affect affordability and accessibility in Singapore? It's something we'll all have to watch closely.
It is. The market is always changing, and we'll be here to help you make sense of it all.
We'll keep exploring these trends and more in future episodes of Singapore Property Talk Law.
Thanks for joining us. And remember, knowledge is power, especially when it comes to property. So stay informed, stay engaged, and make smart decisions. Welcome back to Singapore Property Talk Law. Time to wrap things up, tie a neat little bow on our December 2024 property market deep dive. We've crunched all those numbers, spotted the trends. Now it's all about, connecting the dots. What does it all mean for you?
We've definitely seen some really interesting stuff, both in the HDB and condo markets. Clear signs that things are still moving, still growing, despite all those global economic worries out there. Shows how strong Singapore's fundamentals are.
Right. And what really stands out is it's not just a simple market anymore. We're seeing different regions performing differently, different types of properties. It's about finding those specific opportunities.
Exactly. The RCR is doing fantastic, both for resales and rentals. And those non-mature HDB estates, they're attracting more and more buyers looking for good value. It's a dynamic market, gotta be smart, gotta be strategic.
And we can't forget how buyers and renters' preferences are changing too. Lifestyle, convenience, those are big factors now. Amenities, transport, that vibrant living environment, it's about more than just the property itself, it's the whole experience.
For sure, people want that perfect mix of convenience, connectivity, a sense of community. And with more people working from home or doing that hybrid model, being close to the CBD isn't as crucial as it used to be. Opens up more possibilities.
Now, we can't ignore the elephant in the room in interest rates. They're going up, making it more expensive to borrow, which could affect how affordable property is. What are your thoughts on that?
It's definitely something to watch. Rising interest rates, inflation, those global uncertainties, they could have an impact. But on the other hand, we've got strong demand, a healthy economy, and not enough new housing being built. All of that supports prices in the long run.
So it's a bit of a balancing act, push and pull. But for our listeners, what are the key things they should take away from all this? What do they need to remember?
The main takeaway is Singapore property, it's still a good long-term investment. But you got to be careful, do your research, and make smart choices. Don't just jump in without thinking.
Right? No need to rush. Take your time, figure out what you need, what you can afford, and if you need to, get some expert advice.
Exactly. And it's important to remember, property markets, they go up, they go down, it's a cycle. But over the long haul, Singapore property has a good track record. It's resilient, it grows.
Good advice. Okay, as we wrap up this episode of Singapore Property Talk Law, one final thought. We've talked about how popular those non-mature estates are becoming. But what happens as they, mature? Do they lose that price advantage?
It's a great question. As those estates develop, get more amenities, become more sought after, will they start to cost as much as the mature estates? Will those lines blur? What will that mean for affordability down the road? It's something we'll all be watching.
It is. The market's always evolving. And we'll be here to help you navigate it every step of the way. Thanks for joining us on Singapore Property Talk Law. Until next time, stay informed, stay engaged, and make those property dreams a reality.